All right, I hope everyone is doing well. So, someone messaged me asking me, giving me actually a few topics to discuss. And I'm actually glad they did that because personally, I enjoy when people ask me questions or really just give topics because that makes it easier on me because sometimes I want to help as best as I can, and I like talking about this obviously. So, but sometimes it's hard for me to realize at times if I may be talking about the same thing or the same type of trading, just because maybe that's more of what best suits me, and that's more of the way I think. So it's always nice when people give me topics. So always feel free, as always, feel free to ask me to cover a topic. So let's look into it. All right, so and again, probably the easiest way, because I'm sure 95% of the people that watch this video look at Al's the brookspriceaction.com website. If you're not familiar with it, please just look in the comments or look in the description of this video and you will see a link to it. And I apologize if I seem like I'm moving around. I'm really trying to stand up more. For one, it's just kind of weird to me making this video sitting down sometimes. Anyways, so this person just being nice, asking for some topics. Uh, and in the future, you don't have to feel. I'm always more than happy to discuss topics. Some days I'm a little more busy than others, so sometimes it may vary when I can actually make the video. But generally, I pretty much like doing it. So this first question is really when you're in a tight channel, it is preferable not to go counter trend since any kind of reversal is likely to fail. For this, Al Brooks distinguishes gaps and negative gaps. When a gap begins to cover is a synonym or symptom. Oh, okay. So he's basically saying when gaps begin to close, it's a symptom of a reversal pattern. Yes, it is. This question has everything to do with simply with buying and selling pressure. And for everyone that has Al's course, his video course, which I highly recommend everyone get because the new one's obviously more than halfway done. Really go back and focus on the getting started and the I can't remember what it's called here. So really focus on getting started and charting analysis. With charting analysis, well, that's this person I would highly recommend needs to get back and watch these videos. And as you can see, I mean, there's 5 hours, almost 6 hours in just these 15, 5 hours and 40 minutes in these, 15 hours and 49 minutes in these, and 15 hours and 56 minutes. So as you can see, and then 13 hours and 13 minutes. So as you can see, I believe there's a total of 56 hours. So you got to understand there's a lot of work that goes into this, and this is just the first half. So if we had to guess, you're looking at over 120 hours of videos, assuming that the forex and the how to trade videos are the same as this. But anyways, let's get back to that topic. So really, this person's asking about distinguishing type channels, and obviously one of the characteristics of type channels is gaps and negative gaps. And this person's saying when a gap begins to cover, it's a symptom of the reversal pattern. Yes, if we think about buying pressure, when gaps are closing, it means limit order traders are starting to make money. In other words, counter trend traders are beginning to make money, but they're not using stop entries, they're using limit orders. So how do you define gaps? he gives me a screenshot. And I always appreciate when people give screenshots. I always really appreciate when they make the symbol obvious in the time frame as well as the dates, because I really like to look on TradeStation and really, because it's easier for me if I can actually view it. And these are gaps, yes. So let me real quick. I'm going to pause the video and go to this on TradeStation. Okay, so here is this person's the day. It's it's around April the 26th of this past year of 2017, and this person, let's look at their chart. So they're saying here's a breakout point. It's a gap. There's another gap. Gaps. Now these gaps are closing. A gap, a gap, a gap, and a gap. And I know what this person's basically asking, because this person's saying, well, gee, you know, we broke above here, the gap closed. Broke above here, the gap closed. Broke above here, the gap's closed. We broke above this high, and the gap closed. So, kind of for illustration, what he's saying is these gaps, we went to a new high, sold off. Went to a new high. Ah, well, you know, arguably, is this a gap? Sure. Did we go for a measured move? Well, we came close, so maybe I'll do it this way so it's easier to see. Maybe here was the high. If we use this high, then we obviously want a measured move up. So yeah, I get why it's kind of frustrating, because when you look at this chart, bears are making money. They're selling this high, making money. Selling above here, scaling in, making money. They're selling this high, getting filled here, scalping out. Selling this high, scalping out. Selling this high, scalping out. Selling up here over here, and they're scalping out. But we just keep going up. And the problem is how tight the channel is. So yes, it's important that that gaps are closing, because bears will keep selling all the way up. But you also have to know what the bear's goal is. Let me look at a daily chart and better explain this. So as you can see, we had a tight channel down and a strong breakout. See, this is a major reversal, because you have trap bears and we're going to lead to more up. It's similar to this move down. It's a major reversal. Although we had a very deep pullback, it changed the trend. Here, this is a major reversal up. So you gotta look at it. Well, first let me go back to a 30-minute chart. I want to show. So here, as you can see, we're channeling up. And over here, we were channeling down. This is the rally down, and this was that major reversal at the low of the daily chart that I was talking about. And look over here. Bulls buy, scaling lower, make money. They buy, strong rally. Price sells off, strong rally. Sells off, strong rally. Sells off a little rally, but it at least closed gaps. Sold off, tighter channel, and the channel was tight. These are all minor reversals though, and then we got into the sell climax. But what's important to note is stop entries are making money. Going back over here, well, over here, it's much harder to sell and stop. So two basic things Al does and I like to look at are how do you structure trades in the opposite direction? In other words, we know it's a bull channel. We know we're going to get a measured move of this because it's a breakout. But what are so we know it's better to buy than sell. So how are the bears making money? Well, we look over here and we see a bear bar, and then a bear bar with a tail, followed by bull bars, another bear bar, followed by pullback, another bear bar. So 3 pushes down. 1, 2, 3. Again, 3 pushes down. Where are the big consecutive bull bars? Now, where are the big consecutive bear bars? they're getting deep sell-offs, but they're not getting any real major reversals. And when you look at this, here's a 60-minute chart. The channels, it's pretty tight. Well, I say that, it's more broad. Here's a 120-minute chart. So in terms of, let me just review the question real quick. The real problem, yes, gaps are closing, but they're also staying open on higher time frames. So if I go to a daily chart, here's what I see. And I see a breakout above all these highs. And first and foremost, we basically have we know we're going to get a measure move. We kind of have a gap right here. We may have a gap up here. So depending on how you draw it, surprise, surprise, we had a measuring gap on the daily chart. So you kind of got to understand the context. The bulls are not, these are basically pretty much gaps. Yes, it's just a very tight channel. And the problem is very often when you get, even though gaps are closing and it looks broad on this time frame, it just keeps going. Let's take it day by day real quick. And hopefully I can better explain this. So at this point, this is a 30-minute chart. And for people trading Forex, I think 30-minute charts are fantastic. We had a gap up, two-legged pullback, and maybe at this point, when you get 5 consecutive bull bars, you're probably resuming the trend and we're probably going higher. And then we get a lot of bull bars. So lots and lots of bull bars, probably getting some sort of measure move up from this low to this up here. Now, okay, possible exhaustion, we close these gaps. But right now for the bears, what's their expectation? Are they expecting a bear trend or a trading range? Well, probably a trading range. Major stop for the bulls is here. And the one thing, if you listen to Al time and time again, he talks about is, number one, the swing bulls. Always in traders. Well, theoretically, their stop's down here, and they may hold until they get stopped out. Comes close, and then it rallies, and rallies up to a new high, so probably stop down here. Sideways, bull breakout. Maybe stop down here, probably, either this low or this low. And it keeps going up. Maybe stop down here, probably. Comes close, but couldn't do it. So all these bears, they're selling, scalping out. Selling, scalping out. If you notice, price can barely get down to this line. Strong rally, probably exhaustion, maybe a measuring gap, probably not. And look what happened. Bulls sold off. So maybe we'll get something like that. Bulls close the gap. Here, probably stop down here, maybe down here. Bears got a good sell-off, but again, second leg trap in a trading range. Maybe, or in best case, trading range, probably a bull trend still. We rally back up. Big bear bar, so bears are getting selling pressure. But again, until they fall below a lower high, until they fall below a higher low, here, now, right here, it's still a bull trend. And, do you move the stop? Would traders move their stop here? Well, probably not. And my issue with doing that is here's the high up here, stop down here. When we rally, we did go above a new high. So I think most traders would keep the stop down here. And if they did get stopped out below, they'd re-enter. And you can see, bear sold, all of a sudden bull bar, another bull bar, another bull bar. Here, yes, bears are making money, but they're only scalping. Bulls are aggressively buying every pullback. And here, close the gap again, but this may be a measuring gap, and it's not. Selling off, going sideways. Finally, if you look at this, the odds are at some point we're going to fall below this level. Or if we rally, the odds could become less and less of price making higher lows. Now, we're starting to get decent bear bars. The bulls want a two-legged pullback. The bears want some sort of major trend reversal. But where is the follow through for the bears? Either way, at this point, it's a trading range. We go up, we break to a new high, sell off, close the gap. We break to a new low, bulls buy, the gap closes. And look, you have to be careful. Many times in a broad channel, the market becomes always in short on a pullback, and then it just reverses and goes back to the high. So here, are we always in short? We might be, but again, new high. Always in short? Probably not. Always in short? We may be, but do you get out here? Do you get out here? You got to get out if you're short. And we just keep going higher. Here, probably the best rally on a higher time frame. So probably exhaustion. Again, it could be a measuring gap, and you look at these bars, we are getting small gaps. Then we gapped up, kind of parabolic, and we're selling off. Maybe a 50% pullback. So anyways, I don't really want to lose touch. But what the bears need is some sort of decent trend line break. Here was the trend line break. So let me kind of put it in a different perspective. When we look at this, the bears need, trend line break, new high, weak sell off, trend line break. They need a major reversal. Here, this is a major reversal. If I draw, maybe if I put the channel down here, it's not really a great fit because really I could draw a channel. I could draw like that. But anyways, when you see rally going sideways, this may be a major reversal. At some point, the bears will get a strong sell-off. So if I was trading this chart, it's just not a great, there's no great swing trades to sell. There's no great swing shorts. Because by the time we're selling off, it looks like a leg in a trading range, bulls buy at the bottom. Here, it looks like a leg in a trading range, bulls buy, we go up to new high. Looks like a leg in a trading range, bulls buy, new high. So really, to get a decent reversal, let's look over here. So we're selling off, decent reversal, but we keep selling off. Remember, most reversals fail. And really, stop entries need to, for a reversal to happen, there needs to be, in this case, stop entry bulls making money down here and scalping out. Because that's what traders do. Traders begin to buy with limit orders and scalp. Then they start buying with stop entries and scalp. Then they start buying with stop entries to swing trade. So here, 2 legs down, large, kind of nested. Leg 1, pullback leg 2, spike channel, consecutive sell-offs. And really, this is the problem. There are plenty of traders who will buy. They'll just buy right here, and they'll keep buying. They'll buy 30 pips lower, 60 pips lower, and they'll buy down here. They are very strong institutions, and they are traders who they're prepared. And they're going to hold, if you just look right here. We had a great example, I think it was of the dollar yen. This is my favorite forex market. But as you can see, we had a stop entry here. If a trader would have bought here and waited for another stop entry, would they buy here? No. Would they buy here? Maybe, but probably minor reversal. Would they buy here? They might. They could buy anywhere in here, and they would have made money. So you can see traders bought up here, and they made money. The problem with channels is a channel is a leg in a trading range, which we all know. But the issue is trading ranges can go on for, in this case, everyone has an idea. At this point, traders know we're probably in a channel that's going to form a trading range. And here, well, let me first just kind of talk in that sense. They know that even if we get a measured move down of this entire trading range, at some point we'll come back to it. Most of your traders are going to be buying these lows, scaling in lower, and scalping out. And you can see a lot of traders that bought these lows and scaled in, if they didn't get out, they very quickly sold out here. Strong enough breakout, at least a little bit more down, and we're selling off. So it's kind of a small version. This is a small version of a channel. Selling off, testing the top of the channel, forming a trading range, and then we sell off again. So if you think about it, a trading range is breakout mode pattern. So that's it's a double top and a double bottom. So in this case, here, we channeled down, rallied up, we just formed a trading range and a double top. The bears want a measured move down. And they may get it. As you can see right here, we formed a gap. So a lot of trade, and we probably tested, well, we did not quite reach that gap, but we probably reached this one. That's close enough. Anyways, channels can go on a lot longer than what you think. So it's better for traders to be, you got to be careful because it's far, let me kind of zoom in for a minute. Here, it's a breakout mode situation. And here we're going sideways, 48. So a bull could have bought this low, scaled in, and scalped out. But at some point, when you see that, are you better off exiting because there's going to be probably a second leg down, or holding? Well, if you're holding, you got to be prepared that we may fall for a measured move from this high to this low. You need a wide stop. And even here, price sold off 60 pips. So I really, if you see this 3 pushes up, you got to expect most of these to be minor reversals. So if I was trading this, let's leave this tight channel down, probably leg in a trading range, expect an upside breakout. We got the breakout. So it's a moving average gap bar, probably sellers up here, and then you get this bear bar. A lot of bulls would exit just because we're 50-50 chance we make a new low. It's a major trend reversal, and we'll probably maybe form a higher low or a lower low. Then you see this bar. Well, that's a problem for the bears or for the bulls. I won buy, but not great. And now we got a second entry. Bulls will buy, a lot of bears will get out. We got a second entry short. And we're trying to test this top up here, but again, forming a trading range. Then we sold off to a lower low major trend reversal. So the problem is that you're still in a trend, so it's better to look and expect most of these will fail. Strong breakout, probably expect a second leg. And we tried and sold off. Sold off some more. So these things can just look never ending. And the problem is they can keep going down. So you have to be really, really careful in tight channels. Now, as far as when a channel reverses, you need to see very strong bull bars. And most importantly, I forgot to even say this, another thing you need a reversal above a lower high. So stop, maybe it's up here. Sell off, sold off some more. Is the stop up here? Sure, maybe, but again, even if we get above this high, probably a trading range. So probably the stop's up here. This looks more like a minor lower high. Here, big enough rally. If we sell off to a new low, stop goes up here. Maybe it goes here. We didn't get above it. Stop probably maybe up here or up here. Didn't get above it. Stop up here. Sold off. Stop up here. Is the stop up here? I don't know. This doesn't look like a strong breakout. Sold off. Stop up here. So as long as you keep getting lower highs, you're going to be still in a bear trend. Then we finally get above a lower high. So now we're probably in a bull trend or trading range, and bulls will happily buy a new low. Strong breakout. Sold off. Strong breakout. Stop obviously down here. And the same to the upside. So I hope I'm answering that question. We had a similar event, USD Canadian. Here. Kind of channeling up. We got a strong breakout to the downside. Tried to reverse it, sold off. Ended up getting a second leg down. Here, tight channel down. We got an open gap. We got another gap. Got another gap. It's just really, it's hard to hold. You shouldn't be holding long. You know, this is basically a triangle. 3 pushes, 1, 2, 3, 1, 2, 3. So you're going to get a breakout up or down. And when you see 3 consecutive bars, you know you're going lower. This channel is so tight that even the first reversal up, traders will probably sell it. Strong reversal up, traders sold it. An even stronger sell-off. You know, we have a double top. We try to form a double bottom. We may get a measured move down. And you've always got to be open. So strong enough bear breakout, probably at least second leg. We got our second leg down. If bulls get out, now we got basically a second entry short, a double top. Bears got to get short again. Another strong sell-off. At this point, you know, maybe it was here. But either way, when you see this, probably at least a second leg down. Here, another sell-off, probably at least a second leg down. Trying to bottom. But the problem is, again, stop up here, strong breakout, tried to reverse, new low, stop up here, new low, stop up here, tried to reverse, new low, stop up here. Started to get a breakout, probably the stop goes somewhere up here. And then, you know, a lot of bulls would probably get out here. But again, this is all a minor reversal. So even if traders got out here, many traders will sell here. So it's not that easy. Starting to go sideways for a lot of bars, getting close to 50-50. This will probably end up being the final flag. And if we sell off, we'll probably come back into this area. So what does that mean? That means that traders will begin buying these lows. Reasonable stop entries. So got to be aware that we'll probably come back to this range. And we did. But just barely. Trying to sell off again. Maybe 3 pushes down. 1, 2, 3. And look, we're getting a lot of buying pressure. Lots of overlap. This looks like a leg in a trading range. But the bulls need a strong breakout. They need more than 1 bar. If anything, bears are selling up here, but bulls will scale in and buy lower. So I hope that's answering the question. How do I view gaps and negative gaps? Well, I mean, I view it as simple as, let me try and find one real quick. So, excuse me. Arguably, we had a breakout up here. I mean, you could say that's a negative gap, but it's still, and obviously the gap closed, but it's still, it's not really a good example. Okay, so here's kind of a negative gap. If you said, okay, this was low, this is kind of an outlier. I mean, really the gap would be from this high to this low, but maybe you said the gap's from this high to this low. Well, we went above this low. Technically, it's a negative gap, but really, I kind of view gaps as how easy is it really for the counter trend traders to make money? At this point, if you bought this low, you had a few chances to get out, but if you didn't get out, you got trapped real quick. So to me, I view channels as if I was trading counter trend, such as over here, if I was buying, could I make money? No. If anything, I'd be lucky to get out up here and take a small loss. If I'm buying here, am I making money? No. So that's how I view channels, is who's really making money. And these are pain trades. They just keep going down, keep going down, keep going down. And if you're long, it's going to be painful. Let me look at the E-mini. I like Forex, but sometimes the E-mini just kind of has, it's easier because the bars are, as we know, stocks and E-mini, the bars are more precise. One thing with Forex, you got to be a little more flexible. Everything, so many charts are based upon the bid and the ask that it's just, you got to be careful in terms of, because everything's not as precise. For instance, this low not testing this close. Well, it may actually have. It just may not show it on this chart. You have bid charts and ask charts. You have some platforms that do the middle. So let's look at with E-mini. Let's find one. Here's a good example of a measuring gap. It's perfect. Bulls buy this low, scale in, they're trapped. They tried to get out, went down, tried to get out again. And as you can see, it's a second entry short, so a lot of traders will give up. And this is a tight channel. Just look at, if you really make money buying these lows? Of course not. So the second question, for a reversal pattern to be effective, Al Brooks says deep pullbacks must exist. Otherwise, how much you can get the reversal is sideways. Okay, so what he's saying is basically, yes, you have to have a deep pullback. In other words, a major reversal to really have any chance at a decent reversal. And then he's saying otherwise, mostly you get minor reversals, which a minor reversal is a pullback in a trend or it's a trading range. So we were just looking at a lot of minor reversals. This is a minor reversal. So what that means is, at the best case for the bulls, it's a trading range. Worst case for the bears selling, it's a trading range. So if the bears sell this low one short, they know that at the worst case, their stop's up here. They know, they're saying, okay, If I sell here, worst case, we're in a trading range, we get a really deep pullback, I can sell higher and get out of my entry. Bulls, the Bulls are hoping that it's a reversal, but it's not going to be. It's going to be minor. It's going to be minor. And here, this is different. At this point, this is a strong reversal up. It reversed the past 1, 2, 3, 4 closes. Here, nah. And this is one bar. Here, just two-legged pullback. So that, and with the bears selling this low one, they know that, hey, if they sell here, it might just be a pullback in a very big bull trend, and we may be 20 points lower, which we did. So that's a major reversal versus a minor reversal. That's a minor reversal. A minor reversal, you either get a trading range, so you get a bear trend going down, and then you go sideways, worst case, or you get a bear trend, and you go sideways, and you can go up too, and you sell off again. So again, this is a minor reversal. Best it's a trading range, and then we stall somewhere up here. Worst case for the bears, it's a trading range, and we stall up here and test down. So that's why the math is really bad to buy minor reversals, because the traders who are buying these minor reversals, they're buying down here and scalping out, and they're getting out below this low because they know, and they're probably prepared to short because they know the odds favor more down. Just like this, minor reversal. When you get a channel that's this tight, sideways is most likely. Okay. Then he says sometimes he puts examples of nested wedges. Yeah, I'm sure Al does. The market is always forming wedge bottoms, especially in trends. Here, 3 pushes down, 1, 2, 3. And that actually happened to be a wedge, but it's more parabolic. But if we look, let's go to a 5-minute chart. Oh, this is a 5-minute chart. Huh. Let's look here. Okay. 3 pushes, 1, 2, 3. Broke below it. 3 pushes, 1, 2, 3. And by the way, this is kind of an example. I'll just point out real quick. It's consecutive bottoms, so you can do it a couple ways. Let's start with this. Bear breakout, second leg. So it's 2 legs down, another leg down. So it's a wedge. 1, 2, 3. Odds are 10 bars, 2 legs at some point. Then we broke below it. Well, a lot of traders will buy down here, even though it's not a good signal bar. They expect 2 legs sideways to up. So some traders will buy and they'll just get stopped out below and look to buy again. Other traders will buy, betting on 2 legs, worst case sideways to up. They'll buy and they'll use a wide stop. And then they'll say, okay, strong enough breakout, probably a second leg. I'll look to buy more on the reversal up. And some will wait until here and they'll buy more here and get out at the first entry. Others, maybe they exit at break even. But anyways, it's consecutive bottoms, and that's for another topic. But here, 3 pushes down, broke below it. Let's find a more stronger trend. Here we go. Nested wedge top, 1, 2, 3. First push, second push, third. Is this really going to be a reversal of this type channel? I mean, do you really want to sell here? No. And if you did, are you really thrilled about seeing that? No. 3 pushes up, 1, 2, 3. Parabolic wedge. So it's parabolic wedge. We're probably going to reverse. 1, 2, 3. Are we really going to reverse when you see this? I mean, come on. If you sell here, do you really think you're going to make a lot of money? Look at this. Look how difficult it was. Just ask yourself, how can I make money seeing this rally? If I sold below here, lost money. If I sold this close, did I make money? Sure. If I sold this high, did I make money? Sure. If I sold this high, did I make money? Oh, well, no. I actually got trapped. So it's not that easy to make money. But again, it looks like a wedge. Here, 2 pushes up. So first push, second push. If we get a new high, it's probably 3 pushes and we're probably reversing. Well, if you sold at a limit, you're trapped. And then we'll keep going higher. 3 pushes up. 1, 2, 3. Going more up. 3 pushes. 1, 2, 3. Now, let's think about that. we spend all of our time looking at nested wedge tops and trying to find wedge tops that we just missed out on a, over a 20 point rally. So that's Al's point about minor reversals and nested wedges, is that you can find one. If I go to, I can look at a 5-minute bull breakout, and I could go to a 1-minute chart and find a ton of nested wedge patterns, but they're all minor. They're just pullbacks. They're traders taking profits and looking to buy again. So again, this person's asking, well, minor reversals, what's a deep pullback? What's not a deep pullback? Really, it all has to do with, for me, well, number one, where's the stop? So if I'm long up here, is my pullback, is my stop down here? Yeah, maybe it's down here, but either way, even if I'm long up here, my stop's down here, it wouldn't be. It's only a 50% pullback. So, these are not deep. To me, it has to do with, let me go back to the Great British Pound versus the dollar versus the yen. I'm trying to, JPY, I'll try and keep, I don't know if this person trades the Great British Pound, Japanese yen more than others, but if he does, or he or she does, I try and keep up with using that same chart that people give. So here, it's just not a tight, is this a deep pullback? Sure, but it's after a breakout, so I'm expecting a deep pullback. Here, this, let's give an example. Buy climax, sideways, another push up, strong sell off, so probably second leg, and we got one, then we rallied up. In terms of deep pullbacks, sure. If strong sell off, maybe the stop up here. So either way, even if let's say your stop's up here and you're short. Is this a 50% pullback? It is, but look how tight the channel is. Probably second leg up. Strong enough breakout, second leg up. So it really has to do with, is it a broad channel, is it a tight channel? Or stop in this case, if I think the market's always in long, are bears making money? Well, they're making money selling new highs. So guess what? They're going to sell this high and sell higher. Eventually, they're going to make money on a stop. So I hope I'm making sense with reversals and what's a deep pullback. For me, it all has to do with, where's my stop? Do I think we're in a broad channel? Do I think we're in a tight channel? It just has to do with the market cycle. So for the use of a stop loss, I'm just going to say, for the use of a protective stop, once it's hit, your premise is incorrect. If we assume the case of a bull's trend, let me just read this question real quick and I'll reword it. Yes. So this was the point I was trying to make a few minutes ago. Let's say you're in a bull. He's saying, if your stop gets hit, your premise is wrong in a trend. So if we assume we're in a bull, if we're in a bull trend, and we get so what this person's saying is, if we are, okay, maybe, I don't really like that example, otherwise I'd stay with this chart. Okay, so here we go. We're in a bull trend. Stop down here, maybe here. Well, really stop down here. New high, stop down here or here. Clearly stopped out. Now, we're either in a bear trend or a trading range. We're not in a bull trend. Selling off, stop up here, sold off, stop up here, sold off. Tried to break above, stops up here for the bears. broke above it. So now at this point, we're either in a trading range or a bull trend. So even though we went below the low, we're still in a trading range most likely. It's going to lead to a lot more down? Probably not. But again, I was wrong, and it did. Now, really, I don't want to lose. I don't want to lose. I don't want to kind of get in the habit. I don't want to get in the start of just kind of saying things, not really thinking things through. Yes, the odds are when we went above this high. The odds are that we're in a trading range or bear trend. But the problem with that statement is, if we're in a trading range, in general, 50-50 chance we're going to measure move up and measure move down. Well, since we've been in a bear trend on larger time frames, we could simply break to the downside and get some sort of measured move down. So you got to keep that in mind. But anyways, yes, in general, and that's really more of a surprise. When you see this, you're going lower. So it's all these traders are trapped. But in general, when you get a breakout, if your stop's here and then you eventually get stopped out up here, you're in a trading range. Now, but you got to remember, a trading range is a breakout mode situation. So just like here, a large trading range, at some point, this time we broke out to the upside. We got a measured move. We even got a measured move of all the way up here. So I hope that makes sense. But yes, if price, when we went up to here, if we would have gone down to this low, we would be in a trading range and no longer clear the bull trend. Okay. So, oh, okay. So this is kind of like a multiple part question. So let's say that again we're on a bull trend, price goes below a higher low in this case. We're either in a bear trend or a trading range. Yes. As the recent price is in a support area. Oh, okay. Okay, let me kind of think about this for a minute. So it's basically saying if we're at support and you think we're in a trading range or a bear trend, what are you looking for? A, trading range, B, downward trend. In the case of A, would you try and re-enter again? Because possibly it's near the low of a trading range. Or B, would you look for shorts? Well, that's exactly what I would do, but again, it depends. So, and actually, the dollar Japanese yen is a really good example of this, of what I was just talking about. Okay, so first, let's look at his example so I can make sure I understand the question. Okay, so right here, this is a good point. So, and again, it makes when I'm doing these videos and people ask questions and they give examples, it's extremely helpful when they point out I can clearly see this is the euro dollar 5 minute and I can clearly see the date. So it makes it so easy for me to look on TradeStation. And that way I can kind of walk people through it. So right here, here's my problem. The instant thing right here is, for one, strong breakout, we're always in long, expect a little more up. Here, we got a new high. Is this a strong enough breakout so that traders will put their stop down here? Probably not. Just ask yourself, are you saying, gee, that's that, when compare this to this. Let me look on the euro dollar real quick. See if I can find it first off. So this is going to be June 21st. Oh, okay. Go back a little bit. Okay, so it's right here. I think it is. Is that it? Yeah, okay. I'll zoom in a little bit. So try to make mine identical. So there's 22nd. Okay. So right here, this is where this person's asking. When I look at this chart, big up, big down, confusion. Consecutive bars probably always in long. Bears probably failed, so we're channeling up, channeling up. Strong breakout. Probably we have a measuring gap, and really, I think when I see this, the one thing I'm expecting is bears to make money, especially the ones who sold here, sold here, sold here. I expect them to make money. Now, I don't think they're selling. When they see this and this, if they're planning on selling just 10 pips higher, I think they're going to get out. I'm expecting these bears who are holding, they're going to wait. They're going to wait for the market to top, go sideways, and then they're going to sell more. So if they get a breakout, the price goes 40 pips higher, they're going to wait for it to stall, sell more, betting it comes back down. And I wouldn't recommend doing that. I think it's okay for computers, but to me, that's hard to manage, and you may have to wait several hours. But anyways, strong enough breakout, stop down here, sideways, probably neutral again. Strong breakout, quickly went neutral. Strong breakout, neutral. So at this point, I'm thinking we're in a trading range. When I see this breakout, yes, we went to a new high, but my stop's not down here because number one, I'm thinking trading range, which means I'm thinking we may very easily fall below these lows and we could still be always in long. So if I'm going to swing trade, my stop's down here. When I see this bar, I'm not going to swing trade. I'm just going to get out. Because, number one, for a few reasons. If I hold long below this bar, this is my risk from this low to this high. I don't think we're going to get up here. So my risk reward's bad, and my probability is decreasing with every bar. So I want to get out, and I want to sell closer to the top, and I look to re-enter. 3 consecutive bear bars. So again, with this person's question, would I enter because of 3 consecutive large bars? Sure.